Ladies and gentlemen, welcome to the Tech Frenzy. But today it's all about one company. This might as well be, the Robinhood Weekly, but just on this channel. Okay. So we got Robinhood earnings. If you guys don't know what happened in the day, let me show you. So not only running into the earnings did the company end up going up quite a little bit, but then in the after hours, whenever we saw the earnings, it pumped even further. So on the day alone, okay, we're up 21.3%. Absolutely crazy. I was not expecting this type of run. It's just crazy. But the further you look into the numbers, the better it gets. Not the worse, the better it gets. And then the amount of extra color that they ended up adding on the earnings call just goes to push how freaking bullish they really were. I'm going to go through as much as I can of what I heard from the earnings call, some of the things that they even said to my own question that I said on the earnings call. What a freaking honor that was. I don't know if that's ever happened ever in history before, that someone other than Wall Street asked a question on an earnings call. I've never heard of that before. But whenever I got the invite from Robinhood to do that, I had to take it, even though as funny as it is doing these types of conversations with you guys, I'm a terrible public speaker and get really nervous. I find, at least if I'm on my own platform, I'm like, okay, well, I can subject you guys to this, and if you guys want to leave, fine. But if I'm doing that on someone else's platform, I'm like, oh, I'm making them leave on someone else's platform. Like, I don't know. It's completely different. But yeah, hopefully that becomes the norm. I'd love to ask more questions on these calls, and I just suck it up. But so let's go through some of the details that they ended up saying, and then we can continue on from there. So first off, let's start with the base that they're laying. Okay, and I can pull up some imagery here as well to help underscore what they said in the earnings call and some of the questions that we ended up getting. So first off, oh, it's not wanting to zoom in any more than that. No, sorry, one second. Technical difficulties. Whatever. Okay, there we go. Robinhood Gold, okay, setting the base of the customers that come onto their platform. They got 2.64 million at the end of Q4. They've already said that they're really closing in on 3 million members. Now, the interesting part about this, and we've talked about this over the last little bit, is that, or actually, I should keep that up. That's going to be useful. With this sort of base, you see it going from 6.1%, 7% attach rate. This means that out of every single member that they have, the amount of people that actually end up going with the gold product out of the entire user base is now at 10.5%. But they said in their most recent cohorts on this quarter, that number is actually reaching 30%. So all the new cohorts that are coming onto the business, 30% of them are turning to Robinhood Gold immediately after signing up onto the platform. So where is this 10.5% going to go going forward if the new cohorts that are coming on are seeing such higher amounts of average revenue per user, such higher amounts of assets under custody? So this is what this means, right? The 30% of users, not 10%, not 6%, the 30% of new cohorts are finding faster rates to get to retirement accounts, 1.5 times net deposit growth rates, and 6x the total assets under custody. These are crazy rates. Now, it would also be of me to be unbiased a little bit here and say that this number will average out a little bit more as they get to a higher adoption rate. That being said, products like retirement adoption rate probably will not adjust because it has nothing to do with how much assets under custody they have or how much deposits they could actually put in. It's just a matter of whether or not they want those Robinhood benefits. So this could probably stay at 4x while assets under custody and net deposit will average out to some degree. Okay. But I mean, they even highlighted that they have a gold event coming up in March in San Francisco, in that they also are going to highlight even more products that they're working on for the gold subscribers. Okay, so that potentially might even bring up the adoption rate even further if they can continue to deliver value at the exact same price. This is what we hope for. Okay. Now, The EPS, let's talk about this now. They had an unbelievable beat. I was expecting closer to 50 cents. What they ended up getting was $1. Okay. Immediately, if you were to have seen that, it would have screamed tax benefit or a one-time benefit from something going on the back end. That's exactly what happened. We called it out right then and there whenever we saw the earnings call. So don't expect that going forward. Expect actually the opposite. So there's going to be no more benefit to their GAAP numbers, as now the tax rate that was hovering around anywhere from 2 to 4% is now going to go back into, or what it normally should be at, which is the mid 20 percentages, until potentially there might be a Trump corporate tax cut initiative. What's your name on that shirt? It's not my name. It says when the company started and the coordinates of where they started. Not my name. They didn't give me an exclusive shirt. This is just from like some swag bag or something. I don't know. Anyway, average revenue per user on Robinhood. Think about these compounding effects on this business, right? So I was in a call before this earnings call actually got started with some people that weren't exactly bullish on Robinhood. But they said, oh, well, I don't know if to put this in a tech, if it's a tech play, if it's a brokerage play. It seems like more of a brokerage play. Forget all that. I don't believe it's any type of play. This is Robinhood. They're very unique. You can't, put it in with any of the other competitors that they actually have. So what we did actually end up seeing was an average revenue per user go up from $81 of last Q4 of 2023 to $164 of this quarter. Okay. And now a lot of that is actually Robinhood Gold or retirement accounts or these sort of additional revenue streams that are not going to go away just because the market is hot, right? Those things are going to stick around. But the volume that we actually ended up bringing on was, very beneficial. So let's zoom this in even more for people so then they can see. You can see here just over the last couple of quarters, and we'll just go from year over year. So this was last year. This was this year. And this year, you can see just how beneficial this really was. Okay. The amount of revenue or the amount of volume was just insane. Okay. And crypto was the really mind-blowing one. So if you guys remember what question I asked, I said, hey, you're priced very well on crypto at only 0.5%. But if you go back and look, you guys were doing 0.1%. So you 5x'd your take rate, and yet you're still one of the cheapest in the entire crypto space. So where is this going to settle out at? Like, can we imagine that on $71 billion of crypto volume that we see 1% take rate? Like I want to know where this settles. And so if we take a look, instead of doing 358 million, you could essentially double that. We might actually end up seeing, $710 million of crypto revenue just from them adjusting their take rate, if it actually can go to 1%. Now you say, oh, well, if they double their rate, they'd be so outpriced versus the market that people wouldn't trade on Robinhood. If you go to Coinbase and check their, retail, how much they're actually charging, it's like 1.68% last quarter. And that includes the large cohort of people that have Coinbase One that are paying $30 a month to get free trading volume. Okay. So it's incredible how much cheaper they are versus their competitors. They could double or triple their take rate and still be, cheaper than the largest players in the space. Okay, so there's so much room for this to grow. This is why everyone's getting excited because, crypto volume held up very well into January. We have January numbers as well. I want to go through that. But just very, very exciting. Justin here, $5. Hearing your name on the CC? What is CC? Earnings call? EC? Maybe oh, you know what I want to check? I wonder if there's a transcript. Did they how'd they write my name? I bet it was Tanner with an ER. I want to see if I'm on the frickin' Robinhood transcript for their earnings call. Yeah, it's here. Okay, let's see. Unidentified analyst is what they put me down as. Our next question comes from Tanner from Future Investing. Tanner, spelt wrong, obviously. That'll be fine. Hey guys, thanks so much for having me. I want to say you guys have some of the best pricing on crypto in the market for retail, and yet your take rate is essentially going up quite substantially. Can you guys give us some insight on your pricing strategy and where you foresee the pricing will settle over time? Cool. I'm sure Amit is there as well. Yeah. And Roy. Wow. That's a historical moment. I know it's small, but like it really, it's a wild moment. That was wild. I was so nervous. I mean, honestly, but I had to do it, so I wasn't going to back down. Okay, let's go ahead and look at some more of their KPIs. I also have some additional things that they actually said on the earnings call that maybe some people had missed or maybe misinterpreted. Okay. Let's jump to some of that as well, and then we'll get back to January numbers. We'll get back to a couple other things. I mean, there's so many. I'm looking through my notes. There's so many things I want to cover here. Okay. One, they said, even though they saw massive member growth in Q4, they said, we're going to add another $100 million to our marketing in 2025, which you can see the ramp from 2023 to 2024 was actually due a lot to, them ramping up their marketing spend. They said, we want to double down. 2025 is a year of growth. We're going to be going for it. And that's what SoFi's saying as well. Everyone's going for growth right now. Okay. I called right before the earnings call, ladies and gentlemen. I said, hopefully they can actually put out do enough buybacks where diluted share count stays flat for 2025. I said that specifically. Okay. Verbatim. They came out and said, we want to make sure that diluted share count will stay flat throughout 2025. Love it. That's what a lot of companies, I think, are going to do going forward. We don't need buybacks to even lower share count. People are just sick of the dilution. Okay, so they won't need to essentially bring share count down, take all the money and throw it back into innovation, especially whenever the stock is on an absolute tear. But no one likes dilution. It's a really bad thing for people like to buy into, because people's heads can sort of bring them places that maybe they shouldn't be leading them to. Like, oh, well, over years, I'm going to be losing 50%, or they can just project numbers out if they see dilution out into mass amounts. So if you're saying it's going to keep flat, it allows models to just price for that going forward. And this is why you're seeing the stock do so well. Now, they said index options and Legends are seeing great revenue already. Now, I want to clarify something. They said Legends is at 50 million and index options are at 15 million. Those numbers, I saw Amit spoken with me. He's like, how's that even possible? Those numbers are crazy. If you listen, he says annualized, okay? Annualized revenue, which means that's not true at all. Legends launched 2 months ago and has an annualized trading revenue of $50 million. That means they did about 8.3 million of revenue for Legends in the last 2 months, okay? If they keep up the same rate, that's what it'll be going forward. Now, it's important to know that they're saying, hey, we're actually growing. So they're not projecting any growth into those numbers. They're just multiplying it by the time over how long there is in a 12-month period. So if it continues to grow, it'll grow past 50 million in annualized trading revenue. And not only that, they want to add so much more. And they're saying, hey, you know what? We're actually seeing a lot of compounding effects already. Like, not only did we roll out Legends, but then we rolled out index options, and then we rolled out index options on Legends. So this is also seeing compounding growth. That's going to continue going forward. And then not only that, you're building these platforms and then you're shooting them off to international spots like options in the UK. Beautiful question from Roy. Beautifully answered from the Robinhood team. They gave some insight into some of their acquisitions that they've been getting into. Bitstamp is in 50 plus countries. That's going to help roll out Robinhood into, multiple countries, bring Robinhood crypto, but also potentially the brokerage side. Then on the, them talking about the future of crypto, they really want to get into real world assets where they can essentially put, real products like private equity or public equity and put those shares on the blockchain and then potentially have the benefits that come with blockchain technology, like instant settlement or, 24/7 markets, these sort of things, while still trading the legal holdings of these assets, between people. They want to be a leader there. Love it. They highlighted very specifically, there's two main catalysts in finance. There's a lot of catalysts in other areas, okay? But in finance, the things that they have to deal with are artificial intelligence and cryptocurrency. They said, we're going to be a leader in both. Okay. Very, very focused on this. They said, we want to, greatly expand internationally this year. 2025 is going to be big for that. They did say the guidance that they did give us, they wanted to grow double digits in terms of revenue for 2025. They can't give us more than that because it's completely tied to the markets. And like you or me, they have no idea what's going to happen in markets. Black swan events happen all the time. Changes, tariffs, all these things could completely turn markets around. Okay. They said, but the things that we can control, like operating expenses, we want to be around $2 to $2.1 billion of operating expenses. And this is not including provisions for credit losses as they roll out their credit cards. Now, the credit card is very exciting. Okay. They said, in 2025, we expect gold cards, we expect gold cards to grow from around 100,000 credit cards that we have today to multiples of its current size. So multiples, plural. So what, you're thinking you're going from 100,000 to 300,000, 400,000, 500,000? These are insane numbers, right? And a lot of the people that have actually signed up for the Robinhood gold card, a lot of them are not gold members, but you need to be a gold member to get the gold card. So they're actually thinking that they're going to see more, gold adoption rates, which means more revenue, by people signing up so then they can actually receive the best-in-class credit card that they have to offer. Super cool. Let's see what else we have here. So we can jump into January numbers as well, and then keep your questions ready, because then I'll go through some of what you guys are actually talking about. But there's just a couple more things that I wanted to cover here. By the way, they also stated randomly that they have 100,000 international customers, but they didn't clarify on whether that's UK or crypto included. And I have a feeling it's crypto included, but that's very interesting as well. If it was just UK, I mean, that's mind-blowing. Okay, so let's go ahead and look at January numbers here. Sorry, scrolling down. I can share with you my screen. Just in case none of you guys watched the quarter as well, we can also go through some of the numbers. Also, look at the tightness of some of the things that they're doing, by the way. Stock-based compensation went down to $77 million. So let me actually take a look at this. I didn't even see what it is as a percentage of, oh my God. This was a bear case for Robinhood for me. This was a bear case. Take a look at stock-based compensation as a percentage of revenue. It has always been incredibly high. Like this is ridiculous. 87%, 73%, 50, 30, 42. That's silly, But not only are they tightening the belt, they're also growing the company to $1 billion in revenue. They now have a lower stock-based compensation than SoFi does, 7.6%. Okay. Now that doesn't mean that they're going to get to $1 billion in revenue next quarter, but if they can continue to tighten that for going into Q1, that's nuts. That is nuts. This is the sign of a company that is growing well, but also being mature about their growth. Okay, so that's very, very important. Just in case some of you guys watch me every day, but don't necessarily follow Robinhood really closely, this is why people are excited and why the stock is moving so well. Okay. It's looked like a lot of flat growth, but it's just been changing recently, and it's hard to see this just in the numbers. You have to sort of focus on what they're actually doing: the retirement accounts, the gold cards, all the actual products that they're working on that are seeing higher and higher adoption. Then, whenever the market actually shows off, they are there to be the platform that actually capitalizes the most. So total net revenues, this is exactly what we saw, over $1 billion. I seem to be the only person that was actually shooting for around $1 billion, and we actually hit it. So mind-blowing. Mind-blowing quarter. Okay. Now, let's take a look. I'll try to find also take a look at this. So this is what it would have been if it wasn't for this tax benefit of $424 million, but still $492 million. Don't get confused. This is absolutely amazing. Adjusted EBITDA. Look at that. Look at that. Like, the last 4 quarters has been a step function larger than what they were seeing before. They have I was going to say rule of 40. Try a rule of 100, ladies and gentlemen. This is ridiculous. Like, Palantir just got a massive pat on the back for having a rule of 40 of 81%. Try 106%. Like, what are we talking about here? Okay, but I wanted to show off January numbers. So they just slipped this in just very slightly over in this green bar over here. So it's hard to see. So we need to actually, well, the problem is if I zoom in and you lose all this stuff on the side, but assets under custody went from 192.9 billion to 203.7 billion. Okay. Continuing to increase month over month. And the net deposits went from 5.3 billion to 5.6 billion. The second highest that they've had in company history, aside from November. Okay, so people are pouring in because they want access to the products that Robinhood has and access into markets. Okay. And then in January as well, we also saw the highest ever record-breaking amount of options traded. And you can see this is on 20 trading days. So there's a couple days like October that should be beating these numbers because they essentially have a 15% higher number already because they have more trading days. January is doing so well that they only need 20 trading days, which is the lowest on this chart here. And yet they're still throwing up, record-breaking numbers. So unbelievable on the equity side, record-breaking on the option side, and still extremely good on crypto. Not as strong as what they've seen previously, but still very strong. We knew that was going to subside a little bit. Now, it doesn't mean that it's going to subside going forward. The problem is that or potentially the solution, if you think Bitcoin's going to 150,000, 200,000, whatever, if you're really bullish on cryptocurrency, continue to bet on Robinhood's crypto volume. Okay. They will see massive average revenue per user growth rates and everything along those lines that goes with that, right? They'll be able to handle the volume. And even during my question, they also said that they have a new way of routing people's orders so then they can actually get them better pricing and potentially even take a better fee for that. So they'll be able to compete better with the Coinbases of the world instead of just doing it through rebate. So very good. Now, yeah, in margin book, oh my gosh. So it went in just the last couple months, like last four months here. I was going to say 4 quarters, 4 months. It went from 5.5 billion to 6.2, 6.2 to 6.8, 7.9, and now in January, 8.3 billion. Okay. That's like a 60% increase in their margin book in 4 months. Now, that's not because everyone's taking out margin. I mean, margin rates are increasing, or margin totals are increasing, but really it's Hood's, change in the way that they actually are pricing margin. That's really the difference. Okay, let's see here. In no way, by the way, I know I see some people here trying to compete or trying to put SoFi in with Robinhood. The two are different stories here, guys. There could be multiple companies that are winning. Okay, so I think that they're going to continue to, do very well. SoFi is, but I'm just here to show off that, you don't need to just bet on one company. There will be multiple fintechs that take on multiple different areas of the fintech space, and truthfully, you'd have to be some sort of Nostradamus or crystal ball reader to know which one is going to win out over the next 10 years. And in my opinion, it's easier to take a bet on both. I like both of those managements. I think that they have both executed very well over the last 10 years. Both companies essentially started right around the exact same time. But yeah. Tanner, when can Hood be included in the S&P 500? I would venture to bet it's this year. 2025, there will be a Robinhood on the S&P 500. I would venture to bet that. If you take a look at their market cap, this is at close, it was $50 billion. Okay, it just went up another 15%. So they're going to be shooting much higher here. They're at almost 60 billion now. Yeah, and growing greatly with unbelievable cash balances and long trajectories ahead for them. They're doing well. Tanner, what's the long-term potential market cap for Hood in 5 to 10 years? Well, I won't give you my projections. I'll give you a little bit more bullish ones. Is the management wants to be the largest financial institution, or at least they want to be in top 10 to start, but they do want to get there. And these are projections that they have over the next 10 years. So similarly to SoFi, they want to be a top 10. Yeah. How soon do you expect S&P 500 inclusion? I'm not sure. I would expect somewhere around mid-year, but I have no clue. B-dubs, what do you mean, sorry, about close in market cap? Are you saying top 10 bank? I don't think that they want, unlike SoFi's aspirations to be a top 10 bank, I think that they want to be a top 10 financial institution, which places them not close. I think top 10 financial or bank in the United States is, here, I think it's Truist, right? Maybe it's Truist, 61 billion. I thought that top 10 bank was closer to 80 billion. When did Hood first become profitable? And also, it's not based on market cap, by the way, B-dubs. When did Hood first become profitable? Well, the first time I think was, quite a while away ago in terms of during COVID numbers. I think they were putting up numbers like that. But in terms of times that I've been investing in them, you're looking at right around Q2 of 2023. ETF, thanks, man. Appreciate that. Keep up the great work. Thanks for keeping us all informed and entertained. Super dope that you guys got on the Hood's earning call. I didn't pronounce that right, but yeah. Yeah, sometimes you guys, I think it's the wrong way of looking at it. Whenever a company does well, that you get frustrated at other businesses. You can own them both. You're not tied to one horse. This is why I say diversify. Now, it means that I'm not benefiting greatly if, versus someone that went all in on Robinhood and not in SoFi. But this could have went the completely opposite way in terms of short-term pricing. Like, we don't know when credit markets are going to hit off. Like, SoFi will have its time. I'm not anti-SoFi at all. Okay. And I think that time will be in 2025. But I also think Robinhood's going to have a good 2025 as well. But they are pricier for sure. How can Hood be a top 10 financial institution without a banking license? I mean, Visa, MasterCard. offer financial products to members in that area, and they don't need a banking license. Coinbase could be up there. They don't need a banking license. Now they are pricier. Yes, for sure. For sure. I'm not saying that like that. I'm jumping in at 60. I haven't bought any in a while for Robinhood, but this is why we buy companies and we hold them for the long term, ladies and gentlemen. We're not buying based on this market, about this quarter, or anything like this, but the speed at which they innovate. Like, I cannot stress this to you guys enough. Okay. See the execution level of these businesses, SoFi included, Robinhood included, and try to expand this over time. Okay. If they're putting out 5 products for every one of their next competitor, what is that going to look like over 1 year, 2 years, 5 years, 10 years? You know what I mean? They have been on top of the ball. The way that they are controlling their operating expenses, controlling their headcounts, and still pushing out new products is unbelievable. Okay. You're not going to get them for cheap. I think personally, I could be wrong, because this is a more cyclical business than other businesses, right? Like Shopify, Palantir, Tesla. These are companies that can hold very pricey premiums for long periods of time. But like, we would need a bear market in order to get better pricing on Robinhood at this point. They are really, really starting to get that sticky user base where people stick around just for the cash accounts. Like they're really are ingraining themselves in not only just brokerage services, but financial services. So, like, seriously, I think we see Robinhood at $100 this year. I mean, you could be right. I'm not anti that at all. But we would need markets to do well also. So I am a big believer that, and there's been big bear cases through this as well. If you guys have been watching for a long time, tariffs came up. I said this is either going to continue on for an extremely long period of time, or it's going to be gone within the day. I took the optimistic side. Okay. Thank God the Canadian government did the right thing and agreed to very small demands of putting 10,000 border patrol units to help with the flow of fentanyl. But I am a very big believer of bullish markets over the next 3 to 4 years. AI is going to take premiums much higher than they are today. The waves after that, in terms of autonomous driving and robotics, these are all things that are going to help out brokerages. People are going to be very excited to make lots of money in markets. Self-directed is going to become very popularized. And Robinhood wants a large part of that market. And based on their execution of past years, of past quarters, I don't think they're going to slip. Okay? And I'm sure even another thing that might end up happening is they've made mistakes before where, they've temporarily betrayed the trust of their customer base by taking away the buy button on a certain GameStop. And that allowed you to get some pretty freaking good pricing on Robinhood. But I promise you that was temporary. Now, I'm not buying more Hood right now. I'm not buying Hood right now. I'm just sitting on my gains. But I'm not selling either, which is, definitely a form of bullishness. I'm not going to cash. Like, tighten up, ladies and gentlemen. Find the companies that are doing well over time. I have my position in Robinhood. You guys still on SoFi, eh? Yes, Dan. Exactly. like constantly right now. I'm buying big tech because I'm just in a, I just love how immune they are to many of the market risks. I think, cloud's going to continue to grow. CapEx is just at an unbelievable rate. But then underlying that is my hood positions and everything like this that are also doing well. You are SoFi. SoFi is you. I agree to some extent that I, play a big part in covering SoFi. But I also think like on Robinhood earnings day, let me have a day off. I'm just celebrating one company. Tanner, what are you heading for Shift 4 Investor Day? The 17th to the 19th. It'll be on the 18th, though. They're doing both their earnings day and Investor Day. Is your hood position close to your SoFi position, or do you own a lot more SoFi? I own a lot more SoFi. I own more SoFi than hood. Tanner, you might as well do a 24 hours earnings stream or just stream, not even earnings stream. What platform do you invest on? I like Wealthsimple. I'm a Canadian, so my Canadians can check out that in the link down below. Big fan of them, to be honest. I find them to be the Robinhood / SoFi of Canada. They do a lot on the actual like checking account, cash account side. So I feel like they have a lot of SoFi behaviors. They're not as much trying to tackle the active trader markets, but I mean, even Wealthsimple has level 1 options. So like, I don't know what they're doing, but so it's a little mix of both. But no futures ladders, nothing crazy like this. I keep it basic. Why not Questrade? I mean, mainly just commission, and I got to Wealthsimple first. I'm not a big crazy person on what brokerage I use. I buy companies and hold them for the long term. You really have to start worrying about like your timing of your trades and everything like this. If you're doing hundreds of trades a day, like obviously Wealthsimple would be god awful. But I'm not. I'm, making purchases on weekly basis that I friggin' like on companies that I want to hold for years and years. Does Wealthsimple let you hold money in US dollars? Yes. So not everyone. I heard it's rolling out to people, but I got it pretty early. So I get to hold it in US dollars, obviously on my brokerage side, but you can also take it out in terms of cash side, and they let you earn a yield on that as well. I think it's like 4% right now. I've been avoiding them with the 1.5% Forex fee every trade. So you're saying whenever you bring over US dollars, they will charge you for that. And even then, they just changed that. If you want to transact over $100,000, they'll charge you 0% on the foreign exchange fee. You'll just pay the difference in the coins if you transact over 100,000. I think it's over 25,000. It's like 0.5. Like they have a pricing like change there. So they're the freaking best. Tanner, why was their EPS so much higher than your prediction? So there's a couple things. I made a video a little bit before where I said that my EPS was going to be at 30 cents. But then if we actually look at my guidance, I changed it the same day. So I did an earnings video the exact same day with Joshua Hill, and Joshua Hill explained why I potentially could be wrong, and I 100% agreed with him. I wasn't breaking it down on an operating expense basis. So I actually expected roughly 53 cents. Why isn't this showing? Oh, I don't have the share count yet. That's fine. Anyway, I was expecting 53 cents. What they actually got was $1.01. But a large portion of that was actually a tax benefit that they had from essentially losing a lot of money earlier on. But now that's completely gone. I think they said they have a very marginal amount left, but it's, materially gone. So Now they're just going to be treated like a profitable business going forward, and there's not going to be any massive large surprises to their GAAP earnings. But that's also why, like, adjusted earnings with these types of things come into play. So what we really saw was 492 million of GAAP net income. 492. Whenever you tack on the tax benefit, you get another 424, but they said 492. Whenever you look at my spreadsheet, I was assuming 480. 480. It's not terribly far off. I mean, it's not far off at all. Let's see here. Schwab, Mark Edgar. I don't know what you're asking. Oh, seeing Hood's growth over the last year or so from your discussions with other YouTubers, is there any thought of fear of missing out by banks to not miss out on this digital future? Do they go, oh crap, get off the fence and move forward with antiquated, the cores that they had and accelerate digital connections with Galileo? I mean, potentially, I think we would have assumed that happens a little bit earlier than now. It's not like, that's probably something that should have been accelerated during COVID. But yeah. Tanner, your thoughts on SoFi management meeting with BTIG next week? I didn't even know that was a thing. PLTR, congratulations. Thank you, brother. Isn't it crazy? That doesn't even buy me a Hood share or a Hood share anymore. That's freaking nuts. That is freaking nuts. Is them meeting with BTIG posted on their website? If it is, that must have just been posted today because I didn't see that yesterday. I don't even see that in their thing. Send me that, Tim, on Discord. Any other questions? By the way, PLTR, thank you so much. Thank you so much. I hope one day that Hood can take off like PLTR. What's your glasses prescription? I don't know. Like, you want the actual, like, the numbers? Sure, I have it around here somewhere, but bad. That's Hood. Oh, dude, thank you so much. Thank you. Really appreciate it. I assume you're a shareholder of Hood. Unlike some of these people in here who are just getting pissed at SoFi because a different company had good earnings. Thank you. That's very kind of you. Where did I get that shirt? Robinhood shirt. I got it from their summit, which I can't wait for their summit next. Like, that was really interesting. Like last year, we ended up seeing how many new products that they're rolling out. And you're like, okay, well, I can't wait for these products to roll out. I get really excited for them. But now they have like a gold product coming out in March, like a gold event coming out in March. They have, let's see here, a Robinhood crypto event in June. And then another one later on, the Robinhood Summit in Miami, hopefully again. Like, what do you think they're going to do there? Talk about what they're already doing? No, they're going to roll out new products. Like, it's freaking mind-blowing. So I can't wait for the speed of innovation that this is going to bring. Just crazy. Congratulations on making it on the call. Thank you, Ethan. Yeah, you know what's very cool about this is that, one, obviously it was a cool moment, but do you think they're going to take it away next quarter? I don't know. And then I hear about other companies like Shift4 invited me to their earnings day or investor day. And they said, hey, like, you know what? We are really trying to get better coverage on this company by retail because we feel like no one even knows about us. So potentially, if you want to come down and make a video, write about it, whatever that you do on what we're actually covering here today. Like, a lot of companies are starting to catch on. I know PayPal is also doing that. They're starting to reach out to retail analysts saying, hey, you know what, potentially maybe we can do interviews. Like there's all these, like a big outreach to retail. Palantir's doing that. They just did a retail Q&A today. It's unbelievable. So like, yeah. By the way, Shift4, holy, what a freaking stock. This company is, let's go to tip ranks really quick. I'll show you what the market is thinking about them. Sheesh. There's been a lot of increased prices on Shift4 recently that has got me hyped up. Now, I've kind of put this stock on a hold for a little bit because I want to see their investor day. I find whenever you have catalysts that are that big, you just sort of wait for new information. What's the stock? Shift4 is the stock, ladies and gentlemen. I mean, Hood was before. This is now. I've been a shareholder of this company since $50. It's now, rising quite higher than that. You can see it here, 116. But all the newest analyst price targets that are coming out are 140, 135. It's just a mind-blowing upgrade from where they were before, 150. This is nuts. And that's after the CEO said that he was going to step away. Okay. Now, is he stepping away temporarily? This is the founder and CEO of the company that's been there since he was 16 years old whenever he founded the company originally. 16. He's now like 41. Okay. Still super young, but Trump appointed him the head of NASA. What are you going to do? You leave. So anyway, that being said, the company sees unbelievable growth. If you just look from like back in 2020 to where they are now, they were doing like, gross gross payment volume of like $7 billion. Now they're doing like $45 billion. Like, it's just crazy. And they have real moats in the areas that they're investing in, like stadiums and hotels and everything. And they're doing great stuff. But I want to know what's going on in the investor day before I continue to build out my position. And I will build out my position if I think that there's more to go. That's a company that I could put more money into because my position is small. So, Tanner, would you support a Shift4 stock split to get retail invested? I mean, it's $140 or $116. I don't think that's really warranted, but yeah, I mean, maybe. But I don't know. I don't think that that's going to be a big topic of discussion. I hold Mercado Libre. This is one of the companies that I like to invest in. I think the stock's like $2,000 right now. They should do it like a 10x stock split. Go down to $200. That's fine. How many stocks do you own now, Tanner? I think it's 17 different names, which is like half what I was holding a year ago. Like half. But yeah. AutoZone needs a split. I don't even know where they're at. Let me check. Yeah, don't you guys wish that Berkshire Class A shares would split? Yeah, AutoZone's probably due for a stock split. Those are the types of companies that I think that, that company could do a 50x split. And some companies do that. I think Chipotle recently did a 50x, right? Thoughts on TTD? I don't have a lot of thoughts on TTD. It's a company that I want to get into. I'm going to deep dive it very soon. What I saw in after hours, I didn't check up on it recently, but I saw that they were crashing like pretty freaking hard. Yeah, that seems to sustain itself, down 26%. Oh my gosh. 27% at the close. Yeah, I mean, those are the types of things that you want to look for entry. So I've wanted entry in TTD for a while. I'm gonna have to check out their call and see if potentially myself, along with the uh, growth investing course members, want to potentially take part in that. But I've got a video tomorrow with them. We're going to be talking about more market stuff, not doing a deep dive, and then maybe I can. I was going to do AMD, but maybe it's actually more prudent to switch it to Trade Desk as the news is here and now. But I can't get a deep dive ready in 24 hours. That doesn't happen. Costco needs to stop going up every single day. Yeah, I know. I would start building out a position in Costco for sure. I'm really on the buy what you know train, but and I'm a big Costco gets their fair share out of me, but I don't have a equity position in them. Just loading up on Trade Desk. Okay, well, if you got in at Palantir, I assume based on your name, and then you also got in at Robinhood, maybe I need to look into it. I mean, you get a pretty good success rate. But I really do just like the advertising space. And I do think of that it needs to be more centralized. Are you considering buying AMD as well? I mean, potentially. But like there's one thing for sure that I'm mad bullish on right now, and that's just artificial intelligence. And so I'm actually buying a lot of NVIDIA still. But honestly, since it's ran up to 130s and stuff, I've been buying more positions in Amazon and Google, but still. I like all three of those names a lot right now. I think I'm getting old. Arthur, this is what people need to get out of. What's the next moonshot? No. We buy good names for long term. Okay? The quote unquote moonshot, like people would have avoided a Netflix like 10 years ago because they're going, oh no, that's a mature company. I want, a growth company. Maybe 10 years is a little extended. Let's say for Netflix, more like 7 or 6 years. People would have thought that company was getting to a mature level. But it just keeps going and keeps going and keeps going. So I'm really in my a phase in my investment journey, and I'm glad I'm figuring it out at 27. That I want to buy companies that compound faster than the S&P 500 and do that for the next 40 years. And maybe I'll change my investing thesis going forward, but that's really the train that I'm on right now. I like holding Tesla. I like holding Shopify. I like holding NVIDIA, Google, Amazon. All the companies that I think are changing the world. And that includes SoFi. That includes Robinhood. That includes Shift4. Lucky you, I'm 50 years old. Yeah, I mean, but you're probably retired off that Palantir and Robinhood position. So good for you. My horizon is much shorter. If your horizon is much shorter, moonshots are not what you need to do. Moonshots could potentially bury your potential retirement outcomes. They say you want to get more conservative the older you get, not the opposite way around. It's not like my investing journey might be 40 years, and I actually think it'll be longer. It'll probably be 60 years if I could help it. But let's say yours is 15 years. Does that mean that, okay, now we start scratching lottery tickets? No, this is the opposite. You need to find depending on, you don't need to do anything, by the way. This is not financial advice. I have zero idea what your investing outcome looks like. But it's not like you can't make a lot of money on dividend growth plays and stuff like this. Or even mature tech companies are starting to be almost valued as safer investments. Microsoft is going to do extremely well. You're like, I don't know. Your investing journey is shorter. You should be buying what I'm buying. Google, Amazon, stuff like this. Yeah, bonds as you get older. So we used to do a thing back whenever I was a financial advisor called what was it called? Life cycle funds. I think that's what it was. I might be getting the words not chosen correctly, but the idea is the same. So as you get older, you go from essentially growth accounts. If you're ever setting up like I don't know what they call it in America, but it's called an RESP in here in Canada, like a child's account before they're 18 that you invest for them, so then they can put towards potential education or first home or something like this. These types of accounts. I don't know if you guys have any of those in America. I'm sure there's some child funding accounts. You just rank up the growth potential on those companies because you have an 18-year time horizon before they can even touch it. Okay. Then into their 20s, they can stick with growth. Some potentially come down a little bit. And then as they get older, you just start to bring in that fixed income until it actually takes over a large majority. And then the equity positions that you do have are value stocks, growth, dividend growth. That's what you want. How many hours you be streaming? A couple. 529 accounts is what it's called in the States. Got you. Also, that sucks for you guys. That like all the things that have to do with financial stuff in the States are just random like combinations of letters and numbers that potentially mean nothing. 429s, 529s, freaking just 401. I don't know. It's just a random assortment, a bunch of numbers. You just have to know what they mean. Here in Canada, I mean, at least the acronyms actually mean something. You are also paying expense ratios for those life cycles. Yeah, but you don't have to go into the funds. That's not necessarily. I'm not trying to pump a fund on you. You can run your own thing. All I'm saying is that your risk tolerance should shift as you get older. You don't have to pay the expense ratios. Any update on PayPal? Are you still holding? Ladies and gentlemen, am I still holding PayPal? Let's see if the stream knows. B-Dub said it. Tanner flushed PayPal. Yeah, I'm not holding it right now. Not that they can't make more money. I actually think that they're in a good position. But it's clear to me that this is not the growth stock that they wanted to be. And I just, look at all the beautiful people. No, just because it's not a growth name. You still make a lot of money. And yeah, you could potentially wait for investor day to make your decision up. But I am really hot on, innovative growth names, lots of change. That's what I want to invest in. Are you still holding SoFi? Yes, because there's lots of change there. Yeah. Nubank should be reporting earnings soon. That's going to be very exciting. That's another one I'm very excited about. Is Amazon a growth name? Yes. You want to know how you know? You look at the amount of buybacks and dividends that they end up giving away. If they're not giving away those things, what are they doing with their capital? Are they investing it back into the business, looking for new innovation? Tick, tick, tick. Yes, yes, yes. Yes, they are a growth name. SoFi, your second position? No, Shopify is. PayPal's security is absolutely awful. That's not the impression that I got. That's just for property and equipment. Property and equipment for the future years, $100 billion. Crazy. Are you concerned about Nubank and Brazil rate hikes? I am worried about the macro there for sure. That's why I'm not adding right now to the company, but I am still holding. And the reason why I'm still holding is, like I said, buy great names, hold them for the long term. You know? And the day that that changes, if there's something that I feel like I have alpha on, that they show out in unbelievable statistic or something like this, and the market doesn't move on that, I'll build my position or something even further. Okay. So I'm not saying that we don't like just because I say buy good names and hold them for the long term doesn't mean that you don't, you know, re-underwrite them. Okay. Constantly re-underwrite your positions. Okay. But I am investing and holding for the long term unbelievable growth names. Having a company like Robinhood is cool that they grew 100% this quarter year over year. What's going to be even cooler is me holding it over 10 years and say that, you know what, I bought a company in its low teens and then watch it grow into one of the best, largest financial institutions in the world. And if it doesn't become that, I will be off. I will have sold during a point where I think that the thesis had changed. Okay. And then even then, some people feel like another situation that people get stuck on is they realize that the thesis has been changed, but potentially they're not the first person to see it. So PayPal, for example, management said this is a growth company. I thought that the trade would do very well. And by the way, I made money on that trade. It's not like I didn't. I made like 30+%. But they said that it was going to be more of a growth name. I'm seeing it as being a little bit slower than that. Guidance came out for 2025. Stock crashed by like 10+%. It was at $90+ and then went into the 70s. Okay. A lot of people say, oh, you know what? It's a changed company, but there's an opportunity for me to sell whenever it gets back to 90. I mean, potentially that works, but that's not the way that I like to do it. Okay. Drop your losses and buy the things that you want to have in your portfolio. Sleep well at night. These are such important lessons to learn. They're hard to swallow, but they will make you richer. It's okay to take losses or even lost opportunities if you improve your portfolio to what you actually want to hold. And potentially, I talked to Tevis about this so long ago. Okay. Through the shift of 2020, 2021 to 2024, there were companies that were slated to be the next big thing that turned out to not be, like Skills. Okay. A company that I had loved. Okay. And then it turned out that that wasn't what was going to happen. They were on the losing side of, the consumer trend. But people get in this mindset. They go, oh, well, I'm down 80+%. I'm just going to ride it to zero. Don't do that. Okay. Don't ride it to zero. Bad mentality. Sell, take your pennies out of the company. If it's gone, it's gone. Okay. Sell it and put it into a company that works. Because even the couple $1,000s that you end up keeping in that business or whatever and transferring it into a company that works is still, a few $1,000s that's end up compounding at greater rates. So yeah, sunken cost fallacy, but that's why it's called a fallacy. That's a wrong way of looking at it. But 100%, you're right. This is what everyone gets themselves into. Drop it. So Tanner's saying sell SoFi. I'm up like freaking nearly 100% on this business. Actually, I think I am up 100%. Did it recover today? Yeah, I'm up 100%, nearly exactly. That's not sunken cost fallacy. And the thesis hasn't changed. So I'm not bothered by stock price. I'm bothered by a change of thesis. Okay. If the potential growth rates that you were hoping for happen into the future, you realize in your due diligence that that is no longer coming, time to drop it. You know, I think some people think like whenever I'm doing my course or whatever, that there's some sort of magical equation in there. Like, no, you can find this stuff online. I think the important part is that it's all condensed into, you know, a certain thing of like, these are the rules to freaking live by, and return to these rules. Have a checklist. I have a 25 piece checklist that I go through. And when your companies start to fall out of those drastically, it's time to really rethink about your investments. Or if you're doing this to a company you don't currently have, if there's green lights across the board, including expensive valuations, maybe it's time to just jump on ship. So, like, have a good framework for investing. Not all of it is gut. Okay. A lot of this is just about if it fits a preset things that, you know, data doesn't lie. Okay. There's some story to story stocks, but the fundamentals have to be there as well. A bear case for Robinhood. Okay, I can do that pretty quickly. Bitcoin goes down, the market goes down. That is the bear case. In terms of actual management or something like this, there's no bear case. There isn't one. They have great execution. They're doing very well. Noto reiterated EPS 50 to 80 cents. No, he didn't. He reiterated 55 to 80 cents. Small change. Better bottom line. Jared, that is such a great thing to say, but I bought my shares a wedding ring. Yeah. Don't. Nobody around you needs to know that you even hold those stocks to begin with. It's one of the things that I felt like I really wanted to protect the rest of my portfolio from online, naysayers. Like, so I was like, okay, well, I'm happy to talk about a couple companies where I feel like I can add some value, but I don't want to be talking about every single company in my portfolio because, you know, something bad's going to happen. And people go, oh my God, you said this and this. And I had people saying this about the Robinhood video that I put out recently. And they're like, oh, I just lost my life savings because you said EPS is going to come in at 30 cents. Like in the video, I said, I'm definitely missing something, and I'm going to continue to find analyst reports to try to find out what I missed. And then in that exact same day, I went live saying, hey, this is what I missed. They're right. EPS is coming out at 50 cents. You know, so but you guys don't need to deal with any of that. That's my own problem. Okay, I decided to put myself on online. You can hold your own portfolios and not tell a single soul what you hold, and you can drop the wedding ring. You can divorce the losers, and you'll face no social pressure. Make your portfolio golden for you, not for anyone else. Hold the companies that are boring, guaranteed winners. They exist. We all know that they exist. No one's betting anti on Amazon or something like this. These are guaranteed winners. Is cloud going to go up or down? What does the all 244 people here say? That cloud's going up. AI is going up. CapEx spend is saying this across the board. So long-term, fundamental, qualitative analysis on businesses will set you free over 10 plus years. It's going to be boring. But I mean, you got one life. So like there are people that really do have the mentality like Lambo or homeless or whatever, these types of things. I can't help you. I've never been a gambler in my life. But buying great companies and, you know, doing the Warren Buffett. But now I'm not Warren Buffett in terms of I have the best stock picks in the world, but like there's theses that not only that I believe, but that a lot of people believe. The problem that they have is that they sold them too early, or they try to trade them, or like those are actions. Like a lot of people saw AI. We've been talking about it for a long time. A lot of people saw it, and then they buy the wrong names, or they try to invest it in a way that might end up hurting them rather than benefit them. That stuff you can fix. You can't fix vision. I mean, good luck with that. But like if you can't see growth companies, then I don't know how to help you. But to me, I don't know. That's pretty easy. Having businesses that can run without humans, meaning they can go from 8 hours of high cost of employment going down to a couple pennies, and it's getting smarter every day. I mean, that just seems like that's clear as day to me. Just by the leaders in each growth or innovative industry and call it a day. I mean, I bet you if someone was to index that out, that's way outperforming the S&P. Like, I would love for someone to do that research. Just buy the leader. It won't work every time. You know, there will be companies that end up tearing down the leader. But you want to buy the innovative leaders. Like the leaders, not by market cap, but the leaders by innovation. Okay. I'm not excited about Apple because what have they been doing on the product side? What have they been doing qualitatively? That doesn't get me excited. What time is it where you are? 9:41 p.m. My girlfriend is wondering where I am. Well, no, she's downstairs. She knows where I am, but she wants me to come downstairs. Dinner's ready. But I'm having a blast. It was like watching a press conference and Vlad was the quarterback. Yeah, Hood was a lot of fun. Okay. I am going to get going, guys. If you guys want to support the channel, hit the subscribe button, join the Discord. You can find that down below. If you're feeling a little extra generous, you can join the growth investing group. We have an exclusive area in the Discord, and we do weekly videos just for you guys. That's up to you. Guys, have a good day. Thank you all so much for watching. Bye for now.